It's the weekly 30-30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and those that have had the most significant improvement in the last week. Gary Glover has been through both lists and is pulling out the companies to really keep an eye on, those that have had the best moves and those that we can really learn something from, especially in this whipsawing market. Up, down, up, down. But Gary, how are you this morning?
Yeah, pretty good. Yeah, it's a pretty fragmented list, I'd say. There's still no real individual themes there. Just lots of different themes in there. Probably just some smaller names actually emerging in there as well. So but we should be starting to see some new companies launch into the list there. So yeah, I definitely do think you've got to be looking at those IPOs in the last couple of years there, just see what's coming onto the market there as well.
Well, I do know that you keep lists of the last few years of IPOs and consistently cycle through them. Is there anything that's, like, obviously we're looking at the momentum list now, but have you noticed an overall trend within them, or you're just preparing and knowing from history that this is the time where those new leaders can emerge and drive to be market leaders?
Yeah, there should just be some new colours in there. You've just got different industries there. I mean, like we got what's just one, the darker metals there. So you get a few metals in there, but we got pharmaceuticals, we've got drone fields. I mean, research. I mean, it's just a really scattered list there. Really, not anyone in particular there. So.
Like you said, fragmented, goes from automobiles, diagnostic equipment, consumer staples, biodevices, hospital supplies, agricultural, property, retail, banks.
Yeah. Sadly, you do see this, this interesting chart here, the number one there, the Falcon metals there, because you do see this, like this obviously had a BCP in Hickory, so it had the bit of a surge here, and then pull back, and then another surge, probably tighten up a little bit, not much volume, and then another surge in here, and then didn't really give it too much of a, wasn't really a breakthrough there. It obviously just, took out of the gates there. But you are seeing lots of these sort of setups here on the market, some of the smaller names, and they're not, and it's just hard there to trade those because there's sort of, like, one, they're small, maybe under 30 cents, and two, sometimes liquidity isn't there as well. So hard there until obviously you get a catalyst there, comes out there. So probably worth sort of just keeping an eye on these type of BCP setups on some of the smaller names and see if there is a catalyst there. Because the good thing about the catalyst is that then that will drive liquidity. As you can see, obviously the volume was up after it jumped here, then the volumes are up here. So this is sort of come out of there. So just, it's hard there. Well, we do highlight a lot of these BCPs there, but a lot of them are smaller names, so it does make it a bit tricky to trade there. One of the stocks that's been running for a while, I must admit I was surprised Drone Shield actually has kept going here. And I just thought, only because oftentimes it's had a good run and then they raise money. That could be usually not the death of them, but that's the sort of point where, people take money out. Well, yeah, because a lot of people don't realise that it's actually a good way for the founders to actually get out without you knowing. What I mean by that is that if you issue more shares and so you might take some more shares up or something, but if you just sort of, oftentimes, there's a new issuance and stuff there, just means there's more shares sort of gets sort of issued all the time there. And it's just a way for sort of sometimes the insiders to sort of get out there. You can take up, they can often take up more shares. What they usually do is they usually take up more shares and then sell the same amount they had then. They say, oh yeah, we took up more shares, but really they just sort of kept their holding usually stays the same, and they just basically sort of sell like, and then you don't have to basically report what sort of done there. But I know sort of sometimes when more shares get issued as well, you can sort of sell that same percentage and then not have to disclose, because then your holding stays the same percentage as well. So there are little tricks and stuff there that insiders can do as well. And usually sometimes there's performance hurdles as well, they're correct as well. And so as the stock reaches certain levels, then more shares get issued to like performance based shares, and then usually they sell, just say they get 1 million shares, they might sell 1 million and then exercise 1 million, and then the holding stays the same. They don't have to report it. So lots of little things like that. Because you always think, these guys are still in there, but it's always great to see the founders have a big holding and stick with it. But trust me, they're taking some out along the way usually.
So they got bonuses.
Mechanisms for it to get out.
Okay, so they get bonuses as the share price rallies, and they say, well, you can exercise these options, and they're now in the money, and your conversion price is 50 cents, and they're now at $1.20. So they convert 1 million shares, but at the same time, they're selling 1 million shares that they might have been issued at 1 or 2 cents earlier. So they're walking away with money in their pocket. But from an investor perspective, they still look like they're neutral with the same amount of shares allocated to the the same percentage.
Yeah, so you don't have to report that if you sort of sell as money as you pick up, and that's a way to exercise some money there. But yeah, that's all right. Everyone's entitled to do that, and they still got money, still got plenty of skin in the game usually.
Yes. We've digressed. We should get back to the momentum shares.
Well, I guess the only lesson here was sort of drone shit. As much as we got to we basically sort of did raise money into strength, which is always for me a bit of a warning sign there. Got to go back to the old rules there. Sort of if you do sort of have that little pullback, and then the price compresses again, and then edge back. Now you saw some good volume actually on the bounce back, and then you probably saw a bit more selling that I probably would have liked to see. And the volume's still pretty healthy there on that back as well. But I guess the good thing is that it does sort of, you'd say that's sort of like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days up into the high here. And then we're sort of 1, 2, 3, 4, 5, 6, 7, 8 days here down. And we haven't really come back that far. So it's actually, McLaren's talk about sort of counting days up and down just to sort of measure the strength of how the stock was. But we'll see here after day 8 here that much as the volume's a bit heavy, it's actually holding pretty well. Considering it's under raising as well, which I could view that as negative. So that's kind of a positive sign there. So I saw it, hold here a bit of volume. But then, to me, I would never enter until I saw that B wave again break. So, to me, that's the sort of point where I'd like to see that lower high get broken there. So if I was going to re-enter any of these sort of trades there, this is the beauty of actually letting the market do the talking rather than, because oftentimes, like my opinion was basically, we raise money here, it's probably going to weaken off. And it did initially, but then it's actually found support and kept going. Obviously the profile still looks pretty robust there, but if we just let the market tell us there, as soon as we break above 101, that's a little B-wave break there, then we should be buying that. So if we bought that at 101 there, this thing's gotten to 142. So 40 cents or 101, that's a 40% move. That's not bad for us. So
yeah, I'd take that.
Still let the tape tell us rather than sometimes get out of the row of our own opinions. The WMG, Western Mines was the other one I thought was pretty interesting here. Just the whole thing sort of tightening up there. So it's had a nice little break here. It had some pretty good volume through, which I like. And it's pulled back here, volume's a bit lighter. Volume's okay on the next rise. Not bad here. But we've pulled back here now. It's really pretty light here so far. So we're not really showing too much weakness here so far. So this is definitely one to sort of keep a close eye on here. Do a little bit of homework on. But do like the tight price action there. I think there was one on the list there. W4. So that M4. I should say. M4M was number 7 on the list there. I like this less because it's not tight. So it's a bit loose there, So what's Kalamaggi's loose it's for losers and tight it's for winners there. So just a little bit more erratic, a bit more volume in that. We definitely want to see more of that sort of price tightening up here, keeping a little bit more tighter there, not really contracting too much there. So I thought that's one to really keep an eye on here. ELS is another one of those ones that sort of had that, had that impulsive rally at some sort of start here and had this long serving congestion there. And the whole thing did sort of tighten up here until it did break out. Again, they're hard there because it's not. You can see there's not the most liquid stock, bit gappy in there as well. So can't trade these as size there. So I'm seeing lots of these sort of names that look like this. We sort of highlighted a couple there. Might have been E-Road and something else as well. Plenty Group or something as well, which I thought looked pretty good, but just not much liquidity there. So as traders there, you do need a bit of liquidity as well. But what might happen with some of these smaller names is they're a bit liquid now, Chris, but then maybe they'll push on and rather than ingest, and then over time they might, as they build there, come more known, but they might start to add a bit more liquidity. So it's probably worth sort of keeping an eye on anyway. Thought Titan Metals number 16 was interesting here, just because it's had a nice little block of volume there on the last few days there. So again, it's a little too small for me, being like a 3 or 4 cent stock here, but that's pretty decent volume out of the box there. And then we've had 3 or 4 days here, pretty
volume tight.
Yeah, so I'll be watching this one a little bit closer. Just even though it's a 3.5 cent stock, price action's kind of constructive here so far. So yeah, definitely want to sort of have a look at this some homework on it, but maybe a little small. EZZ was sort of one that's come out of the gates. It had a nice little move here so far. It's a little choppy, maybe a little liquid there, but the volumes are actually increasing there, so it's actually getting a bit more liquid there. So yeah, I just sort of put that on my list there, sort of in that life sciences area there. So just I do like the health care, even some of the biotech names as well. I just think that's a sector that's been a little bit out of favour for a while, and I've noticed the health care the health index is just starting to show a bit of strength here as well. And I like some of the healthcare names are sort of starting to sort of build, and some of them come back pretty far here. So just think that sector could be pretty interesting. So there's one sector to keep a close eye on there. EZZ has had a pretty nice run here, pretty good volume all the way through. So it's one to keep a close eye on there. Last one on the list there, number 24, was integrated research there. Just thought this is pretty interesting. That is sort of like a high type flag here, Chris. I mean, it's gone from 40 to 80 cents. It's probably gone there in quick time. And I think normally they suggest 3 to 8 or 3 to 5 weeks or something there time frame, and then usually sort of like a about 3 week minimum retraction as well. So probably definitely not the right type of time frame on the pullback here. Probably a little short there, but I guess maybe you can sort of build in the first leg up. Maybe get sort of like this is
yeah, right.
This first leg here, and that's maybe that's 3 weeks, and that drive there, I guess you might sort of say, or count this in that maybe you are at your 8-week drive in here, but it's definitely a nice sort of high type flag here. We've had good volume in there, and as sort of we had a little bit of selling there initially. Hasn't really come back too much, and then since then it's been pretty light. So pretty light into the low here. Had the volume sort of come back in again on the little rally here again, and we've pulled back there pretty light again. So maybe they'll use a bit more time here, but pretty interesting. They did get an upgrade. So it is a company which has obviously been out of favour, and then all of a sudden reported well and made an impression. Had a big move there. But yeah, the high type flags are pretty interesting now. I did do a bit of homework on those the last few days, just sort of reading up on the high type flags and stuff there. So yeah, some of the stats are sort of entering. The stats vary depending on different sites and stuff there that you talk about. So I think average moves around about 27%, something out of the high type flag. I think around 22% rallied over 45%. So I thought that was interesting. Some of them have pretty good moves. So some of them have had like small amount have actually doubled. Like if you had that 100% of the move, you get I think maybe around 7% might have gone another 100% or something like that. So yeah, not suggesting to do that, but it's just interesting with stats. But it did have a pretty low failure rate, which I thought was pretty interesting. Only about 15 or 17% actually failed. Most of them sort of had some sort of move, either went flat or upwards. So yeah, it was quite a low failure rate, which I thought was actually, that's probably more interesting there, because sort of if you take those trades, even if they don't work out, they tend to sort of at least go a little bit further, or at least go sideways.
I think you'll find for those ones that do more than 100%, they're in part of the group that you're talking about that moves from the launch pad into the momentum. They will have sister support. It's very rare for them to do that have that kind of rally and not have other companies within the sector powering on. So
yeah, probably hard for this one here, because this is sort of this company does stuff which not many other companies do. So it's not going to be on. It's going to be it's a bit of a Robert Crusoe stock anyway. But I think Catapult was the last one on the list as well. So that was a nice VCP in there, which we spoke about last week. It's had a nice little push. They got to 196 there. So seem to be just retracing it back a little bit here. But again, look at, there's the first day down. So you can have a little bit of selling here, but that's hardly big selling. Next day down, very, very light, and then one day up here again. So at a down, maybe this could be a down day here again, but this is pretty light here so far. So not seeing too much selling in here. So this is definitely one to keep an eye on here again. So I thought the result was pretty, very, very good. Love the way the CEO was talking about focusing on earnings rather than trying to keep growing the business. So he basically sort of said, we're at that point now where we're growing. We're now hitting the break-even sort of point here. It's sort of, we're going to focus on the bottom line now. So I know that's like what Michael wants to hear, but yeah, I know sort of the quizzed on head count and stuff like that, and it was all, no, we're not employing anymore. So all everything was sort of, agreeing with what he was saying. So he wasn't sort of saying
just consistent with the message.
Yes. So it'd be interesting. Worth keeping an eye on Catapult here. Actually, sort of, So it's one that potentially sort of could open up there. And we saw with sort of 0 and 360 once they sort of turned that corner went from break even to positive earnings growth there. They tended to keep going there. So it's definitely a name there that could run further here. That's the
quarterly momentum. Yeah. When you look at the weekly leaders in the launch pad, have you seen a theme yet? Have you seen any commonality, or what's coming out of the list? Standing or looking at a list, what do you see?
Yeah, just probably seeing. Look, probably the one commonality I see there is probably like a lot of those stocks aren't the most liquid stocks. So so I don't know what that means. So just some of the more lightly traded sort of stocks. And so I think even in the last week as well, there's a few other names in there. When I looked through them, a couple that I really liked, but when I looked at the liquidity, how much they traded, it's like a bit of a lobster pot there. They don't want to, be getting in and out and stuff there. So, but yeah, that was it. That's probably the only observation there. But
so if we look at, we were down at lows of 7,600 a couple of weeks ago. Before that, we were back up near the highs for the index, 7,900, which we were also at in March. So if the market's not moving and giving us much of a momentum drive, would you is that sort of fitting in with what you'd expect to see in the list of opportunities not being too rife on the momentum side?
Yeah. We're talking earlier, Chris, as well. So that when the market did pull back 300 points to our market, so last Friday, we saw the market, come back to 7,600, and then market just bounced really with a bit of gusto, I thought, and the volume that came in the market was really, really healthy. There was some really heavy buying, good breadth in a lot of the stocks that probably, good quality names that have been maybe a little bit beaten up. And then that was the day I thought, wow, that's not a sign of weakness there. That's why, I think I mentioned in my report, that sort of volume Friday, so that kind of confirmed my neutral view that this market, every time it pulls back a bit, it's going to get bought up. And we look at, if you go back and look at all those election years, so also sort of fourth years, you don't tend to get big corrections. I think 8% was sort of like some of the largest corrections we've had in election years. So just, that's the behavior. That's why, I mean, sometimes we got to get out of Combank at 126 makes no sense at all to me, but the tape is driving it higher here. And sometimes some of these stocks are getting overvalued. And some stocks are way, way undervalued as well, don't get me wrong. But the tape's telling us one thing about these things. So we've got to get out of our opinions, get them out of the way, and just follow the price action, because the price action is actually quite telling. And it is confirming what's going on here. And the other interesting thing in the last 24 hours, the last 48 hours, is we've seen Bank of Canada cut rates, and now we've seen the ECB cut rates. Now, if you want to Google Ned Davis research interest rate cycle, and look at what happens after, what the equity markets after, once rates start to get cut, it's pretty bullish setup. So once central banks start cutting rates there, usually very bullish for equities. So even though the market feels like it's very extended here, had a pretty good run, starting to see central banks around the world cut rates, that is not going to sort of, that's the point of buying the dip here, which was seen here, which the tape is telling us. And it's not supportive of the bear case at all. So it's, it's interesting here. So it's just, I think you just got to keep looking for the names there. So I think there's still plenty of trades around here. Some sectors are way overbought, but we avoid those. Look for any opportunities there. Look for sort of some emerging names here, set up here. So just got to keep looking for this launch pad week after week here, Chris, and seeing if there's any sort of new things that might pop in here. So we saw some of that. We saw a few of the coal stocks actually pop in here last week, and we saw some of the smaller names like Coronado, DRN, popped in as well. So that's had a pretty decent pullback there. Did have some pretty good volume out of the gates here as well. And we saw, I think I mentioned Year Hope there, did a nice BCP, so pulled back in here, nice and tight on the 50, and then bang. So that was sort of one of the things that I sort of saw, but not too many names in that area. What else was on the EUR was a small name, so I guess again I've seen some of these small ones that have sort of come back and starting to pop a little bit there. Even sort of Nanosonics there, which was sort of one that's I just didn't like the way it was actually trading at a bit of a sideways basis, as much as I do like to look for the 0, 1, 2, 3 sort of high lows building. When they square off for too long like that, they often usually break down. Like I think IEL, which is education one there, that was sort of going through a big sideways patch here, and then we're sort of gapped down here now. So probably all the bad news is probably out here against as well for that one. I've just seen that sort of pattern quite a bit there on SMN. It's interesting there again, just a pretty decent sort of downward move there, and just another just sort of popping out of the range there. So seeing a few suppressed smaller names, obviously, come under pressure there. Probably some good news comes out and they're popping there. So maybe a bit oversold there. So there's still a few opportunities around there. Curve Beam, this is a newer name there. I did look into this company because I thought it was pretty interesting when I first saw it there, but I did run it past a few medical mates and they didn't really. I thought it was a bit more gimmicky rather than anything substantial. So the share price went down after that. So they're probably right here, but it is sort of one of those ones to sort of keep an eye on there. But I didn't get
some volume and some movement in the last few days. Yeah,
a little bit of volume there. It's probably changed the character as well, coming off the low here. Like just couldn't get any from people within the industry there. No one sort of seemed to know too much about it, and but it's a bit of a lumpy. It's a big sort of machine there for scanning and stuff there. Like I think it can like multi-scan sort of thing. So it sounds pretty cool, but it's obviously a big purchase as well. So whether they can get over the line or not, be interesting there. SVR. Well, this is interesting there, just because it's sort of again pretty decent downtrend all the way down here, but the whole thing is tightening up as well. So bit of a descending wedge in there, and as each pullback's getting smaller there, but again, it's sort of we're looking at some of these beaten up names that are maybe just starting to sort of pop a little bit. So they're some of the harder ones to trade there. There's sort of probably a little bit more danger in that. If I'm going to trade some of these beaten up names, I'd probably prefer to trade up in class, if I might say that, rather than trade a big cap or a mid cap rather than a sort of something too small. But yeah, I thought the gold, some of the gold stocks I thought was interesting as well, Chris, as well. But those sort of, if you look at gold there, what gold has sort of had that little one thrust and then the second thrust there, and it's sort of held pretty tight here. So still in a reasonable position there. I saw some of the gold names there, like they've all just sort of pulled back. I mean, this is a VCP here for Evolution, tied up in here and then starting to come out there. I saw a few of them there. BRU as well, so still, congested and still staying above the 50 there. So they're still sort of pretty solid here. Always nervous about gold. They've kind of for me, it's been 50-50 gold for me. It's been good to me some years, and not so good others. It can let you down here. But but look, it's staying pretty firm at this stage. So that sector still looks pretty robust there. Not sure about the Iranian names there. They've all come back into the range a bit as well. Going through a little bit of a contraction. So probably just worth keeping an eye on those. Just these stronger names, I'll keep running up. I'll pull back and sort of cool off a bit there. So but yeah, that's really it there. So there wasn't too many in there, just lots of sort of smaller names in there as well. So One Insurance and then I think Cochlear was in there as well. So you have seen some of the, seen some of the bigger names there. I mean, that's a pretty square off consolidation for Cochlear. It hasn't really retraced back too much. And CSL, really, I mean, that's sort of had a pretty square come back in three waves there and then sort of started to build here. So, there's your little first pullback there, and then we've broken above that, but swung back in, but held it here, trying to build it again. I do like this. This is what I talk about the volume there, Chris. Seeing these sort of big volumes here over the last week here in some of the bigger names that are out of favour as well. So I think
out of the lows, yeah.
Seeing Woolworths has sort of had some volume come in as well. So I think like Coles as well has had some good volume blocks come in here. So it's definitely seeing some of the bigger names there. Definitely like Sonic's one that's come off as well. So some of the bigger names there, and then maybe that's maybe we'll sort of see some of the bigger names start to come in here. I can't trade that one there. It's like the P is about 22 or something. Jeez, nowhere any growth 22 times. I'll keep away from that. At some point the market might normalize. Look, it might be. Could be 4 months from now. Could be 6 months from now, Chris. But yeah, at some point we'll some of the stocks will go back to where they should be, and some of the ones that are underwater here a little bit will probably return as well. So yeah.
But as you mentioned, the list had a few larger names in there. So Northern Star, you talked about the golds, but ranked 29th on the launch pad was IAG. A bit of a surprise to see such a large cap in there.
Yeah.
How do you interpret that IAG consolidation and breakout that's going through?
Yeah, the IAG was on there. Was the other insurer was on there as well.
Right through it.
I was surprised to see them up there. Because it'll be interesting here because they'll probably, like we've still got pretty high inflation in Australia. I can't see rates coming off here. I know some people think their rates are big. Until inflation starts to cool down, I mean, you've definitely like Canada went to 5.5%. Knock the stuffing out of inflation, and then now they're about to cut rates there. And the UK got their rates up reasonably high, around 5 or so there. Got on top of inflation there, pushed it down. And, we haven't moved to we haven't worried. We've protected the household rather than inflation. So we're probably likely to stay where we are. But look, it's if everywhere else starts to cut rates, so the Fed cuts rates as well soon, then that's what I mean. That markets aren't going to sort of come back here, Chris. So this is going to stay pretty buoyant here. So, but if you look at the election years, typically they are a bit of a grind up. So this sort of So we're going to see markets come back. Markets, so but it's I think it could be that with what's sort of happening here, by the end of this year, I think what might be the catchphrase will be "buy the dip," by the but and then by the end of the year, when everyone's saying "buy the dip," that'll be
it's all over.
It'll be all over. Yeah, so, but well, let's see how it goes. Yeah.
Well, the other one you mentioned, you said there was another insurer, so AUB 22 on the list, and
so that's up there as well. So pretty buoyant. Yeah, but I mean, if the thing about the insurers, Chris, if the world goes through, starts cutting rates, then the insurers are probably going to come up, aren't they? So so yields might come back, and then so they'll all that money sitting in the bank, earning top dollars for the insurers will start to wind back here. So some of those interest rate stocks there. So something like Computershare as well holds a lot of cash. So there'll be a few of those sort of stocks might be affected there. I think for us, our rates are going to stay where they are for a while. But if the Fed cuts rates as well here in the next month or two, then I just can't see equities coming off. I know they're stretched here, but just Google Ned Davis research. I'll try and get a copy of it and maybe post it on Twitter or put it in a report from Monday or something if I can find it.
Yeah, that would be good. Gives us it's a long weekend, so we'll try come in next week. I don't want to put you to pressure to work on a long weekend and do your report, so see what happens. But if you could share that link, that'd be very good. And is there any insight you want to leave us with, or you've already imparted enough knowledge with us on market cycles and election years and so forth?
I was listening to Jack Schwager, winning methods of the market wizards. There was a bit of an audio book. It was actually quite good, actually a bit of a recap of books there. But one of the things that they mentioned there, which is like a Marty Schwartz comment there. So Marty Schwartz, I think pretty sure he actually won the US investing championships before. He might have ever won it. Well, he definitely won it, and it was up there for a lot of years. Had a pretty good record there. But he says the rallying cry of a losing trader is "I'll get out when I'll even." and it's a really interesting comment there, because it's losing is part of the game. All the best traders know that they to win the game they have to accept they're going to be they're going to have some losers there. So, but the losing trader mentality is I'll get out when I'm even, because it's all about not being wrong. So it's the psyche, the ego. It's not wanting to admit, because if we get back to even, then we haven't made a mistake, we haven't got it wrong, and then we're out. And that's the totally wrong way to look at market and trading, and that's a losing mentality to have that mentality. What's best is that you'll see the best traders, they'll take haircuts again. They'll take lots of small losses all the time. If they're in there and it goes against them, they're wrong. You go, thinking about this wrong, straight out there. Well, there's an interesting story actually Jack Schwager tells about Stanley Druckenmiller. So I think it's you got to write down the date there. It must have been October the 16th, 1987. He was short the US market, short the SPY, I guess you might say, and he'd been short for a while. Obviously, the market was so that was the Friday before Black Monday, and he had basically done pretty well. Obviously, the market had been selling up for a few days there. He thought, market's come back too far. He reversed his position, and so went from short to being long on that Friday. Now Monday was Black Monday. But he knew he was obviously, you got it wrong. But he literally, within the first half hour, he not only closed his position out, his life. So went from, basically they did he did the very wrong thing at the worst possible time in history. Probably, you probably couldn't find a worse example of when you change your view. But he basically, he realized he was wrong, cut the loss straight away, and then went net short again by the end of the day. So if that day, it just sold off. So you would have, first half, Harry realized, shit, that was wrong. Closed it out, took a loss. So at the end of the month, I think he ended up even for the month of October.
That's a roller coaster month.
Didn't lose any money, even though he was net short on Black Sunday, what do you call it? Yeah. So because he made some money beforehand, but talks about loyalty as well. So to the market there, it's as soon as you realise you're wrong, you got to get out. You can even in his case, he's not only did he get out, he realised it's going to go down further, so he just reversed his position there. So don't be loyal to the market. Just be loyal to the tape, what the market's telling us here. And at the moment here, that the market, as much as it feels kind of extended here, and there's a lot of noise, and common sense might say that some stocks are overvalued here, but the tape is telling us, tape has been telling us it doesn't want to get down. So yeah, that's why we just got to listen to the tape. That's why that Friday was quite compelling there. We saw the volume flood in there, buying flood in there. That was a day to me. I thought, I've got to buy some stocks here. Sort of like William O'Neill sort of been managed saying, it's like a follow through day. What are you buying to portfolio managers? Stuff. I've got to go home. There's something along here this day. Everything, the volume's so compelling. Off the lows here, I've got to buy something. So let the tape, to lead you, I think is a good omen there for some of the best traders.
Well, that's a good one to lead with into a long weekend, and we'll take those on board. We'll look up if there's any links you can share on Twitter, and we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Talking about Gary's on Twitter or his X, his handle's over there on the left. On the right, he's got the playlists of both his Tuesday reports, which he just spoke about, and then also some insights into some trading strategies, setups, and research that Gary looked at before.